Hello, investors and traders, and welcome to the Midweek Report. I'm Monte, Chief Market Strategist with Sticky Trades, and I want to wish you first and foremost a very, very happy New Year. We're kicking off the year exactly the way we wanted to. Our positions are already starting to make money into this new year. And before we get into the charts, let me just highlight something for you. Tonight from 6 to 7 p.m., we're going through our rapid fire 1 hour session. Last week we covered 55 stocks in 62 minutes, and I'm showing you something here right now that I normally don't show, and this is the list of star favorites that we will be covering this evening. You'll notice that the blue shaded cells that we have here are the stocks that have already hit their price targets in just the first week alone. Now, keep in mind, this was a shortened trading week, and we still have a lot of time for some of these other targets to hit. Many of these other stocks are very close to hitting targets, so we're excited to go through the star favorite list tonight with our members. If you're interested in participating in that, just go to stickytrades.com, look at the page, and you could look at the rapid fire session and sign in for that. So let's take a look at DIA. We have an official pivot point here. Notice we have a lower high, lower low. My downside target's still in place. I'm feeling really good about that at 365.10. Oscillators are pivoting lower. The CCI down there you can see is about to cross the momentum line, and we now have an increase in volume on the way down. Remember, that is a bearish signal when the volume is increasing on the way down. So that's DIA. If we look at IWM, you can see the same thing, with the exception that the pivot point is much more severe. I have my downside target set at 192.94, as I mentioned last Friday. Today's low was 193.78, so we're almost in that range of hitting that target. Once we do hit that target, I think we could see a little bit of a bounce towards the end of the week for IWM, as we left a very small gap above the market. You see the low from yesterday, which is 198.44, compared to the high today of 197.67. The difference between those two identifies the gap. So I think we could fill that gap and then reverse and go right back down from it, because 80% of the time gaps fill, and when they do, we have another 80% chance that prices will reverse. Now, as I mentioned last Friday, this is really the big deal, and that is in the Qs. We're absolutely broken out below that number 6 fan line, and today we closed below the 20-period moving average right there. Towards the end of the week, we might see a little bit of a bounce, but I don't think we're going to get all the way up to fill that gap. I think we could see what is equivalent to what I call the kiss of death, which is the failure for the price to get back up over the previous trend line, which again is that number 6 fan line right there. So I do think we'll see a little bit of a bounce by Friday, but then next week, I think it's full speed ahead for the bears coming into next week. Now, if we look at SPY, you can see that we have, again, another well-pronounced pivot, but we did not close below that 20-period moving average. Tomorrow, I think we could see that, a little bit of a downturn there, but I do not think we're going to hit that target right away. I'm keeping that downside target on the SPY of 450.18 as a longer-term target, but I think we're going to see just a little bit of a ABCD zigzag here as we do a little bounce, form point C, and then off to a lower low. Again, for those that are following ABCD patterns, you start with the first pivot point up top is A. Once we get a bounce, we could put a B, and then a pivot from B into a downward direction would identify C, which brings us to a lower D. That's what I have in store for my forecast over time, particularly as we go and approach the end of this very first month. So stay tuned for that. All right, if we look at the VIX, finally, we have a very well-pronounced green candle. This is a higher low, but a lower high, half signal there. But we have mixed signals on the oscillators. We have a cross on the stochastic to the upside, but we have a hinge after the CCI is showing overbought. So I think the VIX could drop just a little bit before going higher. So by the end of the week, as I mentioned, if the markets are expected to go up just a little bit before Friday, I think the VIX could drop a little bit. And that moving average down there is right around $12.80. I think that will hold as support. Now, finally, before we wrap things up for this midweek report, I'm hoping that you all had a chance to capture my trade on SLV. I posted this to my X page. I bought all of my shares back at $20.98. I allowed everyone to jump in ahead of me. I gave everyone the 5-minute warning. If you're interested in following my trades on X, just type in hashtag AJSLV trades, and you'll be able to see the notes and the charts that I put up that get me in and out of these trades. So I was able to buy back more shares than what I sold at the very top up here. Very happy about that. I'll let you know when I think it's time to sell out of some of my position. I continue to scale in and scale out of that position to accumulate more SLV along the way. It's a long-term buy-hold position for me that I continue to grow through this process of scaling in. So hopefully you're getting a lot out of that. And again, follow me on X. Just type in hashtag AJSLV trades, and you'll see all my notes attached. So hopefully I'll see you later tonight from 6 to 7. Rapid fire coming up. Have a good one. Bye-bye.